Hi, I'm going to help you review those review questions I gave you last week. I'm going to review chapter 3 here today with you. It's not very complicated. I'm going to review those questions that including some kind of calculation. I'm going to help you to review those true-false questions that has answer of false. Okay, probably need my help to clarify what's wrong with those questions. So my plan is I'm gonna help you to review one more time on coming Wednesday about chapter 1 and chapter 3. I'm going to review slowly. I'm going to help you to learn how to solve problems from chapter 1 and chapter 3. And we will have a quiz on coming Friday, okay? Don't get too stressed as they're not that complicated as long as you spend enough time and fully comprehend some of those tricky concepts. Okay, so chapter 3, things from chapter 3, there are really three big things from chapter 3. The first thing you probably need to understand is what balance sheet is and what balance sheet gives you in return. It really gives you a how much you're worth on that specific period of time. So the way to come up with your net worth is really your assets minus your liabilities. We have three categories from assets. We have monetary assets, we have tangible assets, we have investment assets. These are three different type of assets, and you need to know what these three are and what are some subcategories of different type of assets. And then in terms of liability, we have two type of liabilities. One is long-term liabilities, another type is short-term liabilities. So when you solve the questions, when certain question asks for net worth of a particular person during the particular period of time, and what you need to do is combine all these assets and minus those liabilities. Okay, so for example, I think okay, it's not. So okay, okay, I'll help you go over those questions later anyway. And the second thing from the chapter 3 is uh, cash flow. Okay, so cash flow is really you combine all the income transactions and minus all the expense transactions for that given period of time. It gives you how much money has flowed in and how much money has flowed out. Thus, it gives you valuable information about what's your surplus or deficit during that particular period of time. So these two are really important. I'm expecting you to learn everything clearly about balance sheet and cash flow statement. And probably the third trickiest thing from the chapter 3 is all these different type of ratios from page 78 of your textbook. Okay, we have learned five different type of ratios. One is liquidity ratio, second thing is asset to debt ratio, third is debt to income ratio, and debt payment to disposable income ratio, and last thing is investment assets to total assets ratio. So these are three major things from chapter 3. And other than that, we also have take a look at how to do budgeting. Okay, the importance of budgeting and the importance of revolving saving account to the budget process. Okay. Also, in the beginning of the chapter, I think we also take a look at how important it is for you to have a sound and solid financial purpose and value and those abstract things. Okay, so with these information in your mind, here is the chapter 3. Here is the questions from chapter 3. You might just want to take a look at the paper I gave you last week and go over one by one. Again, I'm not going to go over everything, every question. I'm going to go over those things with calculations, and those things are confusing. Okay, need further clarification. So the first question here is you need to help Paul. Okay, Paul is a college student who has the following financial information he'd like to help in figuring his surplus for last year. So surplus, you can get the surplus or deficit from cash flow statement. Therefore, you need to review all these transactions one by one. If it is transactions need to be included in the cash flow statement, you need to pick them and you need to exclude them if it is not for cash flow statement. So first thing is income, definitely we need to include. And second thing is support from parents, it's another income. Scholarship, yes. And saving account balance is not, okay? Saving account balance is not. We need saving balance account when we calculate our um, balance sheet, okay? And then variable expense and fixed expense, these two also need to be included. And current liability is also not for cash flow statement. This is for excuse me, this is for balance sheet. Therefore, you have this calculation as you can see from Excel spreadsheet on the right hand side of the screen. And this is the calculation. You include all the income, you deduct all the expenses, and then you come up with this total of 2200, which is his surplus for that period of time. Okay? And then number two is easy. It's the strictest method of controlling budget is using the envelope system. Okay, in envelope system, you basically you literally put a certain amount of money for particular budget category. Okay, and then you spend up all the money in that envelope. You do not go out and grab other amount of money from other pockets. Okay, you spend it, you finished it, you're done with that particular budget category. Okay, therefore it's considered as a strictest method of controlling budget. Of course, but envelope here is more it's a parable. It could be your separate bank account with a different bank branch. So this is the strictest method of controlling budget. Okay, number three, Julie and Alex has compiled their financial records and would like to know if they are living within their level of income. What is their surplus? Okay, the same with the number one here. Okay, this is again asking what's their surplus. Therefore, we know instantly this is about the cash flow statement. Okay, in order to calculate the cash flow statement, we need to pick those entries that belongs to cash flow statement. So first, salary, yes. Okay, and interest income, yes. Food expenses, yes, it's a deduction. And rent, yes, it's another minus. Clothing cost, yes. And auto expense, yes. Recreation, miscellaneous expense, these are all the expenses. Okay, he only has two income and maybe six different type of expense. So here comes the calculation on this cell right here, and we come up with total number of 8300 at the end. So the number is B. Okay, and then last one, number four. Jason and Larissa would like to accumulate three times their monthly expenses in monetary assets. Okay, they currently have 2,800 in their money market account, and their monthly expense are 4,500. How much more do they need in their money market account to reach their goal? Okay, so the key here is Jason and Larissa would like to accumulate three times their monthly expenses in monetary assets. So if you're familiar with liquidity ratio, it means that they want to have liquidity ratio that is 3.0 and higher. They want their monetary assets three times higher than what their monthly expenses are. Therefore, we have this calculation. Since we know that their monthly expenses 4,500, we times 3 and minus current savings in money market account, we come up with number of 10,700. This is the account they need to have liquidity ratio of 3 point or plus above. So number is going to be the C. Okay, and then number five. Number five, I think we have dealt with number five before in our first quiz. So again, this is okay. Let me see. This is a balance sheet problem. Okay, this is balance sheet question. So we need to exclude everything that is written as income or expense as they were required in cash flow statement, but not in balance sheet statement. Okay, so all we need to include all the assets here. Okay, so we have three different type of assets here: monetary, tangible investments, and we need to minus amount of money from their liabilities. It also listed short-term and long-term. We just need all these numbers. We need the five numbers only. So you include all the assets and you minus all the liabilities. We have total of $23,825 in return. So this number, the answer is going to be the C. Okay. So that's number five. And number six is plain. Okay, it is necessary, whereas it has put it is not necessary. So it is necessary that your value be consistent with your financial and lifestyle goals. So this is number six. And number seven. Okay, number seven. It's all. Okay, all of these net surplus at the end of months could be. You can use your net surplus at the end of months for all these different categories. Okay, let me scroll a little bit. Let me scroll a little bit and to see what are some tricky questions. Okay, number 11. Maybe we need to take a look at number 11. So, to set the stage for financial success, one must, okay, the saving money and making budget is not the first priority. Rather, identifying financial value and goals is going to be the first priority. So 11 is C, okay? And number 13. Okay. The major purpose of budgeting is to make sure bills get paid. I think you probably heard your mom or dad saying this all the time. You need to have a better budget to get bills paid. But getting bill paid is not really the main purpose of the budgeting. Okay. So by doing budget, we keep tracking of each spending and making so that we have better control over our financial condition. I think that is the prime purpose. That should be the prime purpose of the budgeting. And number 14 is plain, okay, as it stated, it's a true. Number 15, a balance sheet shows flows of income and expenses out of financial for a given period of time. Yeah, it's an accurate statement, except the balance sheet should be replaced by need to be replaced by cash flow statement. Okay, so 15 is cash flow statement shows flows of income and expenses. And number 16, okay, this is accurate statement. Discretionary income is the money left over once the necessities of living are covered. Okay, that part of surplus income need your attention so that you know how to better utilize these surpluses, okay, in the future. Okay, and let's go to number 17. Okay, let me go to number 17. Number 17 is pretty simple. Number D is the answer. I think there's no further explanation is needed. And number 18. Number 18, values are, okay, values are belief. Okay, so this is pretty plain and simple. 19, we just mentioned discretionary income in number 17, I guess. So this is a false statement. Number 20, your goal in financial planning is to manage your income and wealth in such a way that your goals are met in a suitable manner. So number 20 is a true. Okay. 21. Which of the following is classified as an investment asset? Okay. So you probably consider certificate and money market accounts as investment assets, but these really are not in under the most technical sense. Okay, these we'll consider these as liquidity um, monetary assets because we can turn them into cash with relatively less effort, whereas stocks, okay, is going to be the investment assets that it is not always easy to turn it into quick cash. Okay, number 22 is A, of course, is A. We just mentioned it's A. So all rest of them we will consider them as investment assets rather than monetary assets. And number 23, let's take a look. Okay, number 23 is a false. Many experts recommend that people should have assets equal to 1 year's expense. But many experts do recommend that people should have 3 times of monetary assets compared to their monthly expenses. Okay, so we knew that from our liquidity ratio. So this is number 23. So, and number 24 is a kind of goofy question. It's not necessarily true. It's a false statement. This is not it's not a very good question, but if someone asks me to answer, this probably is not true. Therefore, I chose false. Okay. Okay, number 25. Number 25 is okay, number 25 doesn't include any calculation. So which of the following goals is most clearly stated? It need to be specific amount with a given time period. Therefore, the most specific goal purpose stated from the following statement, of course, is the B. Okay. Number 26. The first step in budgeting process is, of course, you need to setting financial goals. We're starting from setting goals and clarifying our values. That's always a good starting point. And number 27 is 15. Okay, number 27 is 15. It's written in the little chart from textbook page 78. I advise you to go back and take a great look at all these different type of ratios, since they will be assessed, okay, throughout our semester. Number 28 is which of the following provides information about person's financial condition specific. Okay, this is going to balance sheet. Okay, balance sheet. And C is not. C is cash flow statement. We need this cash flow statement for some other occasions, not this occasion. Okay. Number 29. Number 29 is B. It's tangible assets. Okay. This is the definition of tangible asset, by the way. So number 30. Number 30, using credit cards to balance your budget is proper budgeting tool. So we do not need credit card to make up our deficit, okay, to offset our deficit. We do use we do need to use revolving saving account to offset our deficit at the end of months, not credit cards, okay? And number 31, let's help Jerry and Gloria Collins expect the following cash surplus or deficit in the first 3 months of the year. So they have more deficit, it appears. Okay, they have little income, 100 surplus. So in order to offset to zero, we do need this calculation right here. Okay, since he has $100 surplus, and they had 200 and 150 deficit, and they are 250 short. So we can say that their revolving saving should at least have 250 to be able to offset their deficit. And 32. So food, clothing, entertainment are example of course, these are variable expenses. These are the expense that you can have control over, okay? These are not the fixed expense that you have no control at all. And number 33, a cash flow statement summarizes transactions that have taken place over a specific period of time. This is true, okay? Number 34 is another true statement. And the number 35, Tran Zhao has monetary asset value 17,500 and monthly expense of $2,525. Using the liquidity ratio, how long could Tran live on his monetary asset if he were to lose his job? This is kind of classic questions in the context of liquidity ratio. So you okay, so you divide his monthly expense with total monetary assets he have, and we can come up with number of 6.9. Okay, as written here on the right hand side of the screen, 6.930693. So basically, if he lost his job, okay, and because he's spending 2,500 each month, okay. If he exchange all his monetary assets with cash, he still be able to live more than 6.9 months. This is approximately 7 months. Therefore, we have answer B here. Okay, so this is everything from the review questions of chapter 3. I hope you can go over these videos again and again if some parts are hard to understand. I'm also welcome you to send me an email or send me a message through Remind. I'll be traveling most of the time today, but I should be able to reply you in some certain stop points. Okay, thank you. Enjoy with all these calculations, and hopefully see you on Wednesday. Thank you.